Hello, everyone. Welcome to today's webinar. This is the final session of the groundbreaking complimentary 8-part webinar course that is specifically designed to support financial advisors as they navigate this new world of blockchain, cryptocurrencies, and digital asset investment opportunities. I'm your moderator, Dara Albright, co-founder of DWealth Education, a new edtech platform that leverages fintech, financial technology, to provide incentivized learning programs for financial advisors, businesses, and individual investors. Today's session will focus on the regulatory landscape for digital assets. This is something that is changing on a second-by-second basis, and it's really important to stay on top of. Today's distinguished presenter is Jahan Jamali, co-founder and CMO of Sarson Funds. Jahan, as many of you know from our previous sessions, is a former intelligence officer and leading expert on emerging technologies, global risk management, and international relations. He's a renowned cryptocurrency educator and is routinely sought by the media to talk about this intersection between cryptocurrency, blockchain, technology, and security. Before I hand over the mic, just a few housekeeping items. One, this webinar will last 1 hour. There will be 50 minutes, 50 of presentation time, and 10 minutes of Q&A. Q&A is typically reserved for the end of the presentation, but you can feel free to type your questions in as they come to you in the public chat box that's over to your right. These live webinars are interactive, so feel free to use the public chat to weigh in on the discussion, but just please make sure that whatever you're typing and talking about is relevant to the discussion, and no advertisements, please, or anything like that. Also, when you have a question, if you could just include a question mark, that would be really helpful to us. That'll help us distinguish between the question, what's a question and what's just a comment. As a reminder to everyone, Investments and Wealth Institute has accepted this webinar for 1 hour of CE credit towards the CIMA, CPWA, CIMC, and RMA certification. Regardless of whether you have those certifications or not, everyone who completes the entire 8-part program will earn a level 1 crypto advisor certification from Sarson Funds, and that will demonstrate your cryptocurrency and digital asset expertise. The completion certificate will be issued at the end of the course as a non-fungible token. If you missed any of the previous sessions, you could still watch them on demand. I'm going to make the links available here in your handout section. We'll also follow up with an email after this program, and we'll provide you more detail on that. But those are available for you to watch at your leisure on demand. And with that, let's jump in, and I will hand the microphone over to Jahan.
Thanks very much, Dara. And Happy New Year, everybody. I hope it started safe for everyone. I know it's crazy times we live in, but I wanted to welcome you back. This is session 8 and the last session of our level 1 crypto advisor certification education program. Today, we're going to talk a little bit more in depth about digital assets and the regulations around them. And to give you kind of an idea of where our level 2 and our next series of educational seminars will go, we really could take regulation and make 7 or 8 sessions out of regulation in and of itself. The regulatory space is evolving quickly. It's the conversations are happening in real time every day, on Capitol Hill, all the way down to K Street where the lobbyists are, and down to the states and across the globe as the digital asset class expands and matures. So what I wanted to do today is just kind of give everyone a broad overview of a little bit of the history behind some of the regulations, some of the challenges that are posed. So we're going to talk, initially on a brief history of crypto regulation. I'll take you up until a couple of years ago because there's been a lot that's happened in the last 24 to 36 months. Give you an idea of how crypto regulation is shaping up around the world in various jurisdictions and different types of countries that are dealing with crypto, at their national levels. We're going to talk specifically about crypto regulation here in the United States. and give you an idea of the federal crypto regulatory landscape as it stands now. And we're going to break down a little bit into some of the different areas that fall into the existing frameworks that we already have, and the discussions that are being had on Capitol Hill, with lawmakers, policymakers, regulators, as well as the crypto community itself. I want to talk a little bit too about what's happening at the state level. I think it's really important to pay attention to what's happening at the state level, and for a few reasons, which I'll get into a little bit later. And then I want to debunk a few myths with regard to how the crypto community is viewing regulation, and how the crypto community is coming together, not always in agreement exactly, but at least at a high level in agreement that regulatory clarity is something the space badly needs. So let's get right on into it. And as Dara said, if you got questions, feel free to put them into the chat. If we don't get to them all, myself and my partner John, we'll be more than happy to review and send them back via email, because this is such an in-depth issue. And in case I don't have the appropriate specific answer for you, I want to make sure that you do get your questions answered. So, crypto regulation, like the crypto space, has been a work in progress. There's no question about that. Since the Bitcoin white paper was launched back in October 2008, we've seen sort of a trajectory of discovery by a variety of different regulatory bodies. And it was only 5 years after that, FinCEN started to put some papers together and take positions, on virtual currencies. One of the main issues, of course, early on in Bitcoin's life was, the Silk Road. And the view was that Bitcoin was being used to circumvent anti-money laundering and anti-crime rules and regulations. So, FinCEN was one of the first to, come out of the gate. Now, and later on that year, China banned Bitcoin transactions. Now, we could have an entire seminar on China's history with Bitcoin, because I think they've officially banned Bitcoin probably at least several dozen times by now, and it's had an interesting effect too on the market. I'll talk a little bit about that when we talk about the global landscape. And of course, very quickly thereafter, the tax man wanted to make sure that they put out a notice, and that for the first time they took a position, with IRS notice 2014-21, that cryptocurrencies are subject to taxation. Now, it's around this time that we started to see some evolution start to happen at the state level. And we'll talk about the BIT license here. But that's when the New York Department of Financial Services created what's called the BIT license. It was the nation's first official law dealing with cryptocurrency companies. And while the BIT license was intended to safeguard the public, unfortunately, as it started to roll out for its first several years of existence, its greatest impact was creating more of a regulatory burden in the views of the crypto community and the fintech community, making it really cost prohibitive for young fledgling companies to operate in New York. And even by the time we got to June 2020, I think it was 5 years later, New York had only issued 25 BIT licenses. And for people trying to apply for one, the costs were north of $100,000 in legal fees, and oftentimes could take years. But then we started to see later on, and we'll talk about this in the state section, how different states took different approaches, specifically Wyoming. In September 2015, we had the CFTC defining virtual currencies as commodities, and that has a great deal of implications when it comes to tax. And also that around this time, the EU, with their anti-money laundering directive, further defined virtual currencies in their efforts to make sure that cryptocurrencies weren't being used, to circumvent AML rules and regulations in Europe. Now, in May 2016, Japan has been quite a bit at the forefront. You can break Asia down into two different subsegments with their views on cryptocurrency. Japan falls into the very, much more of the pro cryptocurrency camp, And they do require registration for cryptocurrency operators to register with their financial services agency, but they were quick actually to recognize Bitcoin as actually a legitimate currency as well. In 2017, we saw in the crypto world, we saw the sort of the advent and the pop of what's called ICOs, initial coin offerings. Unfortunately, a lot of these ICOs didn't exactly pass the Howey test, and the SEC, announced that ICOs are in fact subject to U.S. security laws, and even if they do, even if they do present utility, they have to make sure that they don't run afoul of the Howey test. In 2017, the CFTC took a bit of a step further in outlining its role and its oversight. And we're going to talk about all these different organizations too, because that's part of the issue with the U.S. regulatory landscape is it's fragmented in nature. So defining who oversees what has been one of the things that has held back clear regulatory guidance. But by the end of 2017, the CFTC approved Bitcoin futures to be traded on both the CBOE and the CME, which brought a heightened degree of activity and volume into the space. In 2018, NASDAQ launched Bitcoin futures trading in the first half of 2018 as well. And that brings us up to where, sort of where we stand now. So that gives you a little bit of a back history. But what you can see, and of course, there was a myriad of other activities and actions that happened between 2008 and 2018. But what I want to have you take away from this is the trajectory. That it didn't all come at once, and that this has been a discovery process for regulators as well as the space has matured. And we're going to use that theme a little bit later on when we get to the end and talk about some of the challenges that lay ahead. So where in the world is crypto regulation, right? Well, as you can see here, it's scattered. There's much more consensus on the traditional financial architecture in terms of who can do what and where, but not so much with cryptocurrencies. Some states require licensing. Some states, some nations require licensing. Others ban it outright. Others ban it, then unban it. What you'll see is that nations that have more of a authoritarian regime tend to be a bit more hostile towards cryptocurrency. In Iran, for instance, Iran had it banned for a while, but then they allowed Bitcoin mining with specific licensing that afforded for the central bank of Iran to receive a portion of Bitcoin revenue that was mined. And Russia's been hot and cold. China has been very strategically on and off while they were simultaneously in parallel developing their own central bank digital currency, the digital yuan. And in the United States, there isn't a succinct federal policy. Different states have different rules and regulations. But as you can see, everybody is trying to still figure this out. Right. I'm looking at the polling questions right now. And those are, will regulations, what concerns you most? Regulations will be too onerous, there won't be enough, or there's not enough clarity. And, the two answers that have really stuck out here are either they're going to be too onerous, which we just talked about with the NYDFS, or there's not going to be enough regulatory clarity, which is some of the issues that, crypto CEOs and crypto companies, have been complaining about. Is that there's not enough clarity here, either from federal regulators or it's disparate amongst the states. So I gave you this breakdown. This is going to be much easier to see, obviously, when you get the handout. But just to give you an overview of the differences across the board. You have places like Singapore, where it's legal with, registration. If you're a crypto company, you need to register. And in Switzerland, as well as the EU. In Australia, it's treated as property. In Japan, also treated as property. But in South Korea, it's not legal tender, but there's different registration procedures. In China, currently, you can only, officially utilize the digital yuan. So, it is, it's not consistent across the board. So for the U.S., I want to give you a breakdown a little bit of the different types of regulatory issues and what the status is and sort of who's overseeing what. When I was in 2020, we were working with a congressman's office, Congressman Gozar, and there was a couple different pieces of legislation that were put forward. There was the Token Taxonomy Act and the Cryptocurrency Act. And both of those sought to provide some federal regulations and some clarity into the different types of classifications of cryptocurrencies. Of course, now, since you've taken the earlier classes, and I'm sure from your own research, realize that cryptocurrencies don't all fit into one basket. You have some that are used for transactions. You have some that are used for utility. You have some that can be viewed as a store of value. So all of these types of functions can fit, to a degree under an existing framework or regulatory body. And I remember specifically the Cryptocurrency Act of 2020, which unfortunately, like most pieces of legislation, sort of dies in committee, sought to organize cryptocurrencies into different buckets to fall under the purview of existing regulatory bodies, rather than creating a brand new regulatory organization. And I can tell you that there are some people that feel that there should be a regulatory organization created for cryptocurrency, but I think a lot of people here on this call, myself included, don't exactly view the creation of new levels of bureaucracy to be the most efficient thing. I joined the intelligence agency, long time ago, the late 2000s, 2008. And that was right about the time that the DNI was set up. And I can tell you that it was not smooth going when they created a new organ to oversee all the intelligence agencies in the United States, the Office of the Director of National Intelligence. And I don't really think that will be any different. And if something like that were to be created here with financial regulation in terms of digital assets. But let me walk you through a few of these things. So, cryptocurrency sales, they're generally regulated if it constitutes the sale of a security by either state or federal law, or considered transmission under state law, or a money service business under federal law. For securities, the SEC, of course, has authority over any type of cryptocurrency token or digital asset that constitutes a security. And even if an ICO demonstrates utility, it still will be deemed to be a security if it meets the elements of the Howey test. And this is really where Ripple, XRP, got into trouble, and they are still fighting this lawsuit today, where the SEC took them to court, and it ended up having a handful of large exchanges delist XRP. But that litigation is still being played out in the courts. Now, of course, with money transmission and anti-money laundering, that will fall under FinCEN, and that also includes cryptocurrency exchanges. One of the challenges and the critiques of cryptocurrency exchanges was that there are a variety of different exchanges around the world. Not all of them have the same AML and KYC procedures. So it's the view of most folks in the crypto industry here in the United States that in order for cryptocurrency exchanges to operate here or to onboard U.S. customers, they're going to have to abide by KYC and AML standards and rules and regulations, as we have them here in the U.S. Now, in taxation is also an issue that's been evolving, right? And like I said before, when I was walking through the timeline, in 2014, the IRS declared that cryptocurrencies will be taxed as property rather than currency. Now, that's fine. And now there's some additional rules and regulations from the IRS about accounting for that, whether if you make a sale, in a year's time frame, whether it's capital gains tax or is it taxed as income. Of course, now you have NFTs that have emerged since then, and NFTs, it's still a bit open for debate with tax with tax folks of whether or not that's going to be whether that's going to be taxed as a collectible, which has a different type of tax rate than a capital gains tax, and whether depends on also if it has certain types of utility. And of course, there are some NFTs that are again walking the fine line of being a security, where these concepts called DAOs, a decentralized autonomous organization, where if you're an NFT holder, you could be a member of a DAO, and if the DAO's purpose is to then use DAO treasury to go acquire different items, can that be construed as a potential security? So even within the IRS, it's still evolving. And one of the interesting things, where I'm going to be curious to see how it plays out, is as other countries, like El Salvador, adopt crypto as legal tender, how does that affect the U.S. tax position that it's taxed as property and not currency? So that's one thing that needs to be flushed out, particularly at the federal level, is if there are going to be multiple countries, and I'm sure El Salvador is not going to be the last, that actually adopt a cryptocurrency as their national currency, is that then taxed as property? So that's a discussion that needs to be had. Hopefully, is being had right now in Washington. Now, on promotion and testing, one of the things I want to point out here, because we're going to give a state example, is as far as promoting and testing new concepts. This is fintech, after all. It's not pure finance. It's not pure technology, right? This is right at the intersection of both. Arizona became the first state to adopt what's called a regulatory sandbox. And the regulatory sandbox is designed for emerging technologies like crypto. And that allows companies to test a product, or ostensibly, in this case, like a new token or a new protocol, for up to 2 years and serve as many as 10,000 customers before needing to apply for a formal license. And there's been a handful of other states that have followed suit with that, Wyoming being one of note, that allow for this, so in order to give emerging and fledgling companies the ability to, test their product before having to go through any onerous regulatory procedures. As far as licensing goes, fund managers, if you're a fund manager and you're investing in crypto futures, you are required to register as a commodity trading advisor or a commodity pool operator, both with the CFTC and NFA, or you have to satisfy an exemption. Usually that exemption has to do with the size of your fund. Now, here's where I have I like to talk about this because it's an issue of passion for me. Is that the state of our regulatory position with crypto is woefully behind, and we run the risk of emerging crypto companies and emerging crypto projects leaving the United States and developing elsewhere, where the regulations either are clearer or not as onerous. And Brian Brooks, who's the former acting controller of the currency at the U.S. Department of the Treasury, he's now the CEO of the BitFury Group. It's talked to Congress here last week, about this, and treating crypto as he says, as a single unitary activity whose main feature is a need for financial regulation, be like treating the original internet in the 90s primarily as a tax issue. And he's absolutely right. If you understand the stratification aspect of the crypto landscape and how all of these different types of digital assets serve unique use cases or serve unique markets and have different defined functions, then you can't basket them all up. And to have just a unified view of them is really undercutting the size and scale and scope of the impacts that digital assets are having. Not just about to have, but are having now. But there's one of the good and bad really about the United States, right, is we're kind of fragmented to a degree. Things naturally come up from the states, but not always. And at the federal level, the fragmented approach to regulation has all of these different different bodies overseeing banks, finance, and now overseeing digital assets. There's no consensus right now on how that responsibility should be divvied up, and that's part of the issue at hand. So the CFTC, is it the SEC, is it other bodies of the U.S. Treasury Department? Is it FDIC, right? We have crypto banks emerging. But what's at risk really is that this type of opaque regulatory climate is really driving legitimate activity offshore, and it does stand to harm our competitiveness, not only in technology but also in the capital market sector. We live in an era of economic uncertainty already. This is not really the time for us to bow and cede our leadership position. And it's going to take clarity around digital assets in order to maintain that position, or else we stand to lose it. There's a variety of different emerging nations and a variety of different strategic competitors that operate differently than we do, and are set to rule one way or another and imposing, how they view crypto regulation should be. And really at the heart of it, we live in a hyper-partisan era. Crypto really isn't a partisan issue. And even, Brian Brooks said that, the level of engagement in his last meetings with Congress was high and members were taking it seriously. So this debunks some of what you might read on the news. And of course, don't forget, things you read are designed for you to click and designed to produce click revenue. So you got to take some things with a grain of salt. And I've worked with members of Congress and spoken with policymakers before. They want to learn. And whether you're on the right or left side of the aisle, there's a value proposition for crypto. When people were receiving their stimulus checks, think about that for a minute. When you were receiving your stimulus check, all right, a lot of people I know got a direct deposit, but there were stimulus checks sent in the mail on a piece of paper to deliver relief money. That's not the most effective way of delivering government aid. So a lot of folks on the more progressive side view cryptocurrency, specifically a potential, U.S. Central bank digital currency, as an easier way to deliver government aid, or it can just be near instantaneous. And of course, on the right side, the more libertarian, side of Congress, the more free, free market proponents, all of course see cryptocurrency as the ultimate expression of free market innovation and free market economic activity in a more decentralized fashion. So there's a value proposition on either side. Let me take a look at this poll question. Do you believe the U.S. has a suitable regulatory infrastructure for digital assets? That's a resounding no, and I happen to agree. So yeah, this goes to the heart of what we're talking about now, is that we don't really have an infrastructure that's keeping pace with innovation, and the political process itself and the partisan nature of how politics has become has hindered some of these discussions, where you have, unfortunately, a lot of members of Congress looking for sound bites and calling on regulatory bodies to take more action. But then again, you have regulatory bodies asking for clarity in terms of legislation. And ultimately, laws start in Congress. Right. We can't have, regulatory bodies just making decisions on their own unless there's a legal framework for them to operate in. And that seems to be what they're asking for. So let's talk about states for a minute. And again, this is not comprehensive, by any stretch of the imagination, but I wanted to give a few examples of different state legislations that have been enacted within the last year. One of the things I like to point out is that, New York, the bit license really, I think, was a good attempt at bringing forth some sort of crypto regulation or clarity, but inevitably, like many government intentions, it didn't really pan out exactly the way that I think that folks had hoped, and that it created an enormous burden for emerging cryptocurrency companies. However, Wyoming has taken a completely different approach. Wyoming, in a variety of different pieces of legislation, has really taken great care to clearly define what crypto companies can and can't do, specifically with crypto banks. And if you don't follow Caitlin Long on Twitter, I highly suggest that you do. So Caitlin runs Avanti Bank, and it's the first true cryptocurrency or digital asset bank, and it's based right out of Wyoming. And you have states like Wyoming, you have states like Texas that are opening their arms in a variety of different ways, not only to crypto trading firms or crypto financial institutions, but opening their arms in terms of housing cryptocurrency infrastructure. And this was really important, I think, to have the states take a lead in this, because when China had their last ban on Bitcoin, what you saw was and a significant amount of mining activity was happening in China, as I'm sure many of you know. But what you saw was a shift in that infrastructure, and as mining companies started to move out of Asia, they needed a place to go, and a lot of them started to settle in Wyoming and Texas. And during that transition period, we noticed a sharp drop in Bitcoin's price, and a decrease in the amount of activity happening on the Bitcoin network, and people were starting to freak out. And I did an interview for Forbes and explained this is just an infrastructure shift. China's clamped down on Bitcoin mining. That infrastructure needs time to move, and it did move. It moved and took place, took hold in places like Texas and Wyoming and a few other states. And where at least in the United States, we have carbon tax credits. From a policy standpoint, we at least say we care about the environment, and there's benefits for utilizing renewable energy sources that don't exist in places like China. So it gave Bitcoin miners and the picks and shovels of the cryptocurrency infrastructure not only a place to go and set up, but a place to go and set up in a way that would also taper down on any of the fear, uncertainty, and doubt as it pertains to any environmental impact as well. But one of the ones I don't have on here is Michigan, and Michigan passed a really interesting law. It's really simple and short, that October is going to be Cryptocurrency Education Month in the state of Michigan. And I think that, it might sound fluff, but I think that's fantastic. Because as you can tell right now, the underlying issue that's preventing clear, well-established regulation that helps the market grow really is education at the end of the day. And we're going to be presenting some of these materials to state lawmakers here in my home state of Massachusetts here in the coming months. And we already have conversations going on the Hill, and there's a lot of other groups that are too. And really, that's what it comes down to is understanding. People fear what they don't understand. And you can see this, you can see this in some of the statements that come out of certain members of Congress. I'm not going to not name any except for Brad Sherman, Elizabeth Warren. But you can see that it's really more of a lack of understanding than anything. So the more education that we can promote, and the more that we can have, at the state level, at the very least, the promotion of education and knowledge, I think that's a very good sign. So that was one of the ones here that I didn't have on there, but I did want to note. So let's talk for a bit about crypto's view of regulation. And let me just kick back to the chat to make sure I'm not missing anything. So, contrary to popular belief, crypto CEOs want greater regulatory clarity, and that's even our firm, we welcome regulation because there's a significant amount of capital that's not going to be allocated without regulatory clarity and with an understanding, or without an understanding that there's not going to be a high degree of regulatory risk. I think that lawmakers, at least here in the United States, understand that banning cryptocurrency, one, is not in the national interest, and two, is really not even feasible. And there's still obviously a good portion of the day-to-day crypto crowd and the crypto community that obviously shies away from regulation. But the serious money, the Celsiuses of the world, the Coinbases of the world, the Krakens of the world, the Geminis of the world, they want regulation because they want to be able to provide different types of investment products and vehicles. Right now we have a Bitcoin futures ETF, which I still find shocking that a Bitcoin futures ETF gets approved well before a Bitcoin spot ETF. But right now, by default, from not having this type of regulatory clarity, by default, we're picking winners and losers where we really shouldn't be. We should let the market make that decision. There's still an enormous lack of investment products and mechanisms. There's very few covered call strategies. There's very few ESG strategies, right? I mean, people are sitting there trying to decide across thousands of different coins what they should invest in personally, while their financial advisor only has access to a handful of different types of products that primarily only surround Bitcoin. Well, Bitcoin's literally one of thousands of different types of cryptocurrencies. And unfortunately, what has happened is investors are missing out. So, crypto CEOs want this type of clarity so that they can start to grow and provide products that have a familiar look and feel, that satisfy people's different investors' investment goals, and provide different types of exposure to different areas of the space. This isn't, the crypto space isn't just one sliver, right? The crypto space is going to touch every investment space. It's really that type of paradigm shift. So, without this type of regulation clarity, U.S. investors, unfortunately, are getting the short end of the stick, and they're going to, either trying to make decisions on their own, sifting through a variety of different cryptocurrencies to choose from on whatever wallet they have, if they have one, while their financial advisor, unfortunately, is shackled and only has a few different types of options to offer them, usually only, spot Bitcoin, and trying to find someone to custody that for them. However, as we start to, hopefully start to mature in the regulatory space, financial advisors, once they do have access to different types of products that will emerge, hopefully stand to benefit. And I really do think financial advisors, can be the heroes in this story. Once the reins are taken off a little bit, and once some guidance has been given to them. So one of the debates that we talked about earlier with crypto firms, and it's a debate that policymakers are having too, is, do you utilize an existing framework, or do you write new ones? And one of the challenges and one of the concerns of writing new ones is that you don't necessarily want to create a new layer of bureaucracy. That really doesn't help anybody. But at some level, whether and it's probably going to have to come from Congress, the different types of tokens are going to have to be defined at some level. So Coinbase has taken sort of the position that there should be new policies for digital assets, and that one single entity should have oversight of it. But personally, I don't know if I necessarily agree with that view. Like I was saying before, they fit so many different functions that it's hard to kind of put it under one governing body. One of the things that we talked about earlier was how states have really taken the role, and one of the parallels that I want to drive home is with VoIP. So, but before I get into that, I do want to talk about the different types of categories, right? So I want you to think about Coinbase's position that there should be one governing body. But I want to harken back to the Cryptocurrency Act of 2020 again. What they did was they took existing cryptocurrencies and they divided them up into three distinct categories. One was cryptocurrencies, and those were tokens that are defined as representations of U.S. currency or reserve-backed digital assets. So this would be your stable coins, and they were either collateralized by synthetic or physical assets held in a correspondent bank account. So that would have been Tether, USDC, Paxos Standard, True USD. Then they had another category called crypto commodities, and these were tokens that are based on other economic goods or services. So things like DAI, Binance Coin, utility tokens, exchange tokens. And then there were crypto. What they wanted to do was package crypto securities, package Bitcoin, XRP, Litecoin, Ethereum under that. Now that really didn't manifest exactly the same way, but I thought it was at least a good stab at trying to categorize the different types of functions of these different types of tokens, and then have a governing body be existing regulatory bodies, whether it be FinCEN, CFTC, or the SEC. And still, too, there's not a lot of clarity on privacy tokens. And this is actually a topic of internal debate at my company, is do privacy tokens have a future here in the United States? And privacy tokens, if you don't know, are designed to obfuscate their origin. And obviously, one of the first things that comes to mind as a former intelligence officer is like, okay, it's probably going to be used for nefarious reasons. However, Zcash is still around, Monero is still around, but there's virtually no regulatory clarity at all yet when it comes to privacy tokens. Bitcoin itself is the most transparent payment network in history, but privacy tokens, you take it one step further. So back to states for a second. So the trajectory of how VoIP, and I bring VoIP up for a specific reason, the trajectory of how VoIP got established here in the United States is interesting, and I think has a lot of different parallels to how to how this might play out here with cryptocurrency. So VoIP, when it kind of kicked off in the mid 90s, at first, was viewed more as a data service. But as it started to compete with the phones, then all of a sudden you had a variety of different legal challenges of whether or not this was a public utility. And that battle was not fought at the federal level. That battle was fought at the state level. And it took a variety of different state court cases and a variety of different then corresponding pieces of legislation at the state level to finally bring consensus up to the national level. And I think that's going to happen here. I don't see why it would work any differently. The best, most lasting things that really kind of take advantage of change for the better here in the United States often at times comes from the ground up. And I don't expect that to be any different here. And we see this now, and different states are sort of filling in the void and filling in the vacuum where there's a lack of federal policy or federal clarity, and creating that and creating different types of economic opportunity for themselves, like Florida, Texas, Wyoming, Nevada, Nebraska. A lot of Midwestern states have really taken advantage of this because they see opportunity here. Unfortunately, New York, which really kind of, theoretically should be the capital of crypto here in the United States, came out with a very onerous bit license process and very onerous, state procedures. And unfortunately, there's a handful of crypto firms that otherwise would have been headquartered in New York. Either they moved across the river to New Jersey, or they moved, out of the region entirely. So I think if you pay attention to state legislation, and if you pay attention to the different things that are happening, with regard to, especially Wyoming, really, if you, I know I've said it a couple of times already, but pay attention to what's happening in Wyoming. They've put in the, language into legislation to really define a crypto bank, really define what a digital asset bank is, give them clear guidelines on how to form. And that's some of what's missing right now in some of the other states. But I think the trajectory will probably be about the same, where I think it's the same type of dynamic and the same type of a shift and change in technology. So if you want to keep an eye on someone that knows how to navigate the space very well, keep an eye on Alex Mashinsky, who's the founder of Celsius. Alex got his start in VoIP and knows how to navigate this landscape very well. And Celsius recently completed a pretty large funding round here in November, and they do crypto lending and rehypothecation and have been very successful. And so, he does AMAs and podcasts from time to time. So I think he's got a really good, I think he's got his thumb on the pulse of how the regulatory landscape is going to shape up. So a few takeaways. And these are the things I want you to think about. Now, I don't want to have you come out of here doom and gloom that nobody knows what they're doing. Open discussion, open debate, and discovery is part of the American way. So it's not going to be any different here. And, cryptocurrency and digital assets are set to affect every single one of us, every single one of our businesses, and policymakers and regulators are still trying to get their hands around it and understand it. So, but really at the end of the day, the pace of innovation is moving faster than the internet, right? The growth curve of cryptocurrency is moving at a multiple of the growth curve of the internet, and regulators had a hard enough time keeping up. So the pace of innovation is moving much faster than the pace of regulation, and we saw this very clearly with the debate over the infrastructure bill on what would be classified as a broker dealer in terms of digital assets, and that finally got the crypto community moving, and finally got some members of Congress on their side on this. So there's a handful of people now at the elected officials that have cued into this and are now crypto-friendly voices on Capitol Hill. And I want you to take that, think about that just in terms of perspective. In 2008, this started off as a white paper. Right now, and then people dismissed it, then they laughed at it, then they thought it was a scam. Now there are members of Congress very vocal about the need from not only a competitiveness standpoint, but from a national security standpoint, that the United States needs to embrace digital assets, or our standing in the world and our competitiveness in the capital markets and the financial technology sector are at risk. And these are serious members of Congress. And now these debates are happening with an increased amount of frequency. And there's a handful of bills that are in committee now. And I can't wait for level 2. When we get in, we're going to invite some people that from the regulatory side to come talk about that more in depth, and then we can have some really fun discussions. But right now, one of the other challenges is the fragmented regulatory framework that still needs to be addressed. And that needs to be addressed not only at the policy side, but it needs to be addressed sort of in the crypto community itself. I think it would do the crypto community well to be a bit more unified and agreeable in terms of the classification of these types of digital assets. I think if we can agree on the classification, then I think it's easier then to make the move toward determining how they should be regulated, and whether or not a new organization is warranted, or whether certain certain types of cryptocurrencies can maybe fall under the purview of existing agencies, but with guidance and legislation and policy that's specific to the functions and features of digital assets. Keep an eye on the states, of course. Like I mentioned earlier, the states have been far more innovative in terms of providing this type of clarity. Keep an eye on Florida, keep an eye on Wyoming, keep an eye on Nevada. But they've really sort of taken the lead. And what I think you'll see is that the frameworks that are being created and crafted and that start to show a track record of success will probably be duplicated at the federal level. So the more legislation and the more regulation we see come from states that stick, I think that will give you a clue onto what a more broad or unified federal regulation viewpoint might end up looking like. And really, at the end of the day, it all starts with education. And it starts with education for policymakers. It starts with education with regulators. But before any of that, it starts with education on voters. And that's one thing, too, that the crypto community, I believe, needs to really double down on, is educating voters. The people that make the laws serve because you vote them in there. And if the voters are asking for something, they're going to need to listen eventually. So the more education programs we have, the more, whether it's word of mouth or formal programs, but done in a way that's easy to understand, I think the more success we'll have, because we're going to fear what we don't know, and that's going to translate up right from the voter on Main Street to his elected member of Congress, and flow right back down to regulators. So the more education we can do at the grassroots level, the better. And I think we've been getting a lot better in the crypto community at providing education that's understandable. No one really needs to know exactly how hash rate functions and so on and so forth. But that's been the whole ethos of how I've designed the level 1 course, was to put a lot of this into plain English in a way that's understandable, but gives you a broad view of what's happening in this dynamic. So from an understanding of the different types of tokens, to their functions, their features, how they work, the different types of use cases, and now with an understanding of, all right, how does that play into the regulatory framework and landscape as we look ahead? So, with that, we're coming up on 10 minutes to 3 here in the East Coast. So we're getting close to Q&A time. Like I said, I'll try to answer as many as I can, and any that we don't, just leave them in the chat, and John and I will go through and try to email you back. But thank you very much. This has been a great level 1. Now that we wrapped up our final session for level 1, and I'll turn it over to Dara.
Thank you, Jahan. That was great. And I will say you've done a phenomenal job in not only today's session, as always, but in really, as you say, bringing this really complex topic and conversation into the masses, and taking it in a very understandable and basic way, so that you don't have to be a technologist to understand it. You don't even have to have an MBA. You really have a way of bringing this whole complex topic to the masses, and I know that's really appreciated.
Well, thank you very much, Dara.
So we had some questions first on level 2. So yes, there is going to be a level 2. Do you want to touch upon that a little bit as well? What people could expect on it?
So I have some plans for level 2, but part of that plan is to get your feedback. What I like to do is develop an education curriculum and program designed from the top down. So level 2 is going to be more in depth in some of the core areas that we went through on level 1. But I would love to get suggestions from folks. So please email me and Dara things that you want to see covered a bit more in depth, areas that maybe we didn't get to, or areas that are emerging. So like, please put those in. Email us and for consideration. Over the next several weeks, I'm going to be outlining the level 2 program, and I want to have your input. Nothing makes a program more valuable than getting the input and feedback from the people that went through it. So I want to make sure that I incorporate as much as I can into what you want to learn. That's going to help dictate a lot of how we're going to continue the program.
That's great. And so everybody knows as well, following the session, I'll be sending out an email to everyone. You'll have all of the links to all of the previous sessions, so you can watch those on demand at your leisure. And then we'll be sending out information on the completion certificate as well. And you'll be able to see more about that and have that within the next couple of weeks.
Yeah, so we're going to give you a couple of weeks to catch up on any of the courses you missed. And you can always do this at any point in time. But my goal is once we have a list of the folks that have completed all 8 sessions, is to just confirm your we'll email you to confirm your information, and then provide you with instructions on how to set up your NFT wallet so we can send you your NFT certificate. And as I see this, a couple of the questions here, yes, we're definitely going to, in level 2, we're definitely going to talk about NFTs a lot more in depth. It's one of my favorite topics. We're definitely going to talk about metaverse. So as a matter of fact, I have a few folks I'd like to bring into that session, a few former heads of intelligence organizations whom I've had discussions with on how does the metaverse play into national security strategy. We're going to talk about DAOs, definitely talk about DAOs. So I see a question here on my view of DAOs. I think DAOs stand to be one of the most transformative catalysts to really get regulators moving. I'm toying around. So obviously if you complete all 8 courses, you're going to get a copy of my book, Deep Crypto. I'm already toying around with the second one called The United States of DAO, because I'm fascinated with the governance concept of it. So I think the emergence and the quick emergence and the pace of DAOs might be very well what pushes regulators to move, and actually could serve as a unique pathway to a different type of how we govern ourselves. So I don't want to cue you in too much, but that's where my head's at.
Yeah, no, that sounds exciting. And by the way, I just wanted to bring up the last and final poll, as you had just said that, Jahan, was who do you believe should regulate digital assets in the U.S.? Should it be the SEC? Should it be the CFTC, the states, technology, or none of the above? And by far, the polling answer here today was the SEC. So I thought that was kind of interesting as well.
Well, the SEC is, not exactly taking the lead a lot of crypto enthusiasts have wanted, but not exactly been anti-crypto at all. Like Hester Pierce and Gary Gensler taught blockchain at MIT. And so there are folks there that understand the technology, which is very reassuring. And, I think that's probably pretty accurate that, they kind of stand to maybe deliver out of all the regulatory bodies, the most coherent, regulatory policies. But that remains to be seen. At the end of the day, I think a lot of these regulatory organizations are going to pass the buck to Congress. And so Congress needs to get educated, because they're going to say the existing laws don't really encompass what we need exactly. We need legal clarity, and they're going to ask that from the legislative branch, I think.
Yeah, that's interesting. And you made a great point earlier too. We have to educate the policymakers, but first and foremost, we need to educate the voters. And that, I thought, was just I think that really puts that into perspective. That's a great comment.
Yeah, no, and more and more crypto pro crypto candidates are emerging. The new mayor of New York, the mayor of Miami is all about it. Start to look like in the next election cycle, really cue into folks that have an understanding. I think you're going to see two stark divisions. You're going to see folks that really have an understanding of crypto and are going to come out like very vocal. And then you're going to have a lot of folks that are still very much anti-crypto. And I think that as the market continues to mature, as the space continues to evolve, you'll be able to see right through that. And take that into consideration. If you believe in the space the way I do, that's going to be the major factor for me when it comes to getting into the voting booth.
Yeah, no, it's great points all around. Well, Jahan, thank you so much. This has been really another great session. Thank everyone again for listening and joining us today. And as always, again, we will follow up with a bunch of emails and information for you on everything, how to see the previous sessions, download links, also to download the presentation itself, some other links that might be helpful. And please, feel free to reach out anytime with any questions. And we look forward to seeing you for level 2.
Yeah. So just get caught up when you can. When you sign up to take each course, you do fill out a registration form. So that's how we track. If you've taken one and you feel it wasn't recorded, just let us know. But we'll email you. We'll email everybody to make sure that they know that their attendance in one of these has been recorded, so that you can get your certificate. You can get your book, and then hopefully you can join us for level 2. So thank you very much. This this couldn't have been successful without all the attendees. So it's much appreciated, and I've been happy to help you out on your discovery.
Thanks again, everyone.
All right, take care.